I want to get the backstory, right? I know this started with you receiving shares of stock when you were, I believe, in Ivy League. You went to Princeton.
I did.
So can you tell a story about your family's history and how Ariel got started and how you became in the chair that you're in now?
Well, thank you. I've got sort of, I've been very, very fortunate. I had two extraordinary parents, and they all came from sort of entrepreneurial backgrounds. My dad's father was a barber in Knoxville, Tennessee. My dad was an original Tuskegee Airman and flew over 100 missions in World War II. He decided that when I was age 12 that he was going to expose me to the stock market. He went to law school on the GI Bill and had a small law practice. He never got it very large, but he was out there, fighting hard to grow clients and build his business. And I watched that. But at the same time, he wanted me exposed to the stock market. And every Christmas and every birthday after I was 12, I got stock certificates instead of toys. Mm-hmm. And at first, that wasn't a lot of fun, but it was a great idea. And then he introduced me to his stockbroker, the first African-American stockbroker on LaSalle Street here in Chicago, a man named Stacy Adams. And Stacy became my mentor and my role model. On my mom's side, my mom was the first African-American woman to graduate from the University of Chicago Law School in 1946. And she said she was inspired to become a lawyer because she watched her father use his legal skills to stop my great-grandfather from being extradited back to Tulsa after the race massacre. My great-grandfather, J.B. Stratford, owned the largest black-owned hotel in the country at the time.
Oh, that's your great-grandfather?
Yes.
So when we went to Tulsa, not to interrupt, when we went to Tulsa and they gave us a tour of Black Wall Street, and they actually told us about your grandfather.
Well, yeah, I was just, I was in Tulsa several times now recently, and there during the centennial year, and he was someone who was out fighting for economic justice for our community, fighting the Jim Crow rules and laws, and he was a stand-up pioneer, very successful, and his son C.F. Stratford started the first Black Bar Associations in the country, helped fight the restrictive covenants here in Chicago, and helped Earl B. Dickerson with the case at the Supreme Court, Hansberry versus Lee. So long story short, I was just lucky to have these pioneering parents and families that cared about building Black wealth. That was really key. And so I've inherited that mission.
So you're given stocks as a gift. At what point do you start to figure out which equities you want to invest in? Because I know Ariel starts at the age of 24. Correct me if I'm wrong. What did you start developing your own investment strategy at around that time, or at what point are you figuring this out?
It was kind of a journey. When I was 18, my father turned the portfolio over to me, and I had a broker right across the street from campus, and I would sit and talk with him about the markets, and he showed me where to go to Firestone Library to read newsletters and learn about the markets in a different way. And then I was fortunate in corporate finance at Princeton. We had to read a book called A Random Walk Down Wall Street by Burt Malkiel. It's one of the classics and one of the greatest books of all time. And he was the head of the economics department at Princeton. And I went to see Professor Malkiel during that time, and we stayed in touch over these last 45 years or so. And I learned then about the idea that crowds can get out of control and groupthink can take over, and everyone chases what's worked yesterday. He talks a lot about the great bubbles that have occurred within the world's history, and again, how people can lose their minds at different types of the market, either be overly excited about the markets or overly fearful. And so it started me thinking about being a value-oriented contrarian investor. And again, that book had a profound impact. And of course, I started to read other books on the market, started to read about value investors like Warren Buffett. And they helped me develop that investment strategy that I had during the sort of 2 years between college and starting Ariel.
As a contrarian investor, what do you think of the global macro picture right now, and what opportunities do you see that most people are not talking about?
Well, it's one of the key things. We are very much believers in being long-term investors. Our
Yes.
tortoise is, the tortoise is our logo to remind people that old Aesop's fable, slow and steady wins the race.
Mhm.
We want to buy companies we can own for the long run and try not to get too tied up in the local, the macro things. What's going to happen with interest rates next week? What's going on with unemployment and inflation? We're aware of it, but we often believe that the markets are going to go higher and over time. And Warren Buffett always reminds us that last century the Dow Jones started at 66 and ended at over 11,000.
Yes.
And that last century we had 2 world wars, Great Depression, many recessions, a pandemic. Our capitalist democracy somehow finds a way to march forward. And so we try to be long term. I know one of the things that's fun to talk about, you talk about a little bit about basketball, but our favorite stock right now is Madison Square Garden Entertainment. It owns the Garden. And, the Garden is rocking these days with Jalen Brunson and the Knicks doing so extraordinarily well. And so we own the 2 publicly traded companies that are affiliated with the Knicks. The MSGE, Madison Square Garden Entertainment, owns the Garden. And then Madison Square Garden Sports owns the Knicks and the Rangers, the teams themselves.
So, yes, the Knicks. Wow, finally.
Go New York, go New York, go.
We have
Doing
something.
good.
Yeah.
Yeah,
They're fun. They're fun to watch. They compete.
Yeah.
They play so hard.
for
Yeah.
sure. So
Yeah.
I want to ask for our audience, can you just explain what a contrarian investor is? Because I think I don't want to kind of skip over that. I know that you are one, but how would you describe a contrarian investor?
A contrarian investor is someone who's an independent thinker who doesn't follow the crowd and tries to figure out when the crowd has it wrong. There's a great investor named John Templeton who always talked about the fact you want to buy a stock when there's maximum pessimism, and that makes you a contrarian. So a contrarian is someone who just doesn't follow the crowds. The examples would be, you guys are all too young to remember, but when the stock market crashed 22% in 1987,
Yeah.
Ariel was 4 years old. We were calling all our clients, say, send us more money. Our favorite stocks are on sale. The market's down 22%. We want to invest now. During the financial crisis of 2008 and 2009, we were contrarians. Everyone was so fearful. The market kept going down every day during that horrible recession. It didn't end until March of 2009, but we kept buying our favorite stocks. They got cheaper. And then when the economy recovered, we did really well. And then finally, the great example of this is during the pandemic. We were buying stocks like Vail Resorts that were completely shut down. We were buying Royal Caribbean when the ships were being docked and no one could get on a cruise ship. No one wanted to go on a cruise ship during the pandemic. But the stock has done extraordinarily well coming out of the pandemic as people recovered. Now people want to be back on ships. They want to go skiing again. And those stocks have done extremely well. So that's a real life example of contrarianism, buying those types of leisure companies when you're in the midst of a horrific pandemic.
Yeah. I mean, 1983, you start this business. So I want to go back to this time because it's very rare that we get to have a conversation with somebody who's actually created a fund. What was that process like? Because you've seen a few revolutions here, right? 83. I was born. You weren't even born yet. We were both born. Obviously, we go into the technology period of the late 90s with the dot-com boom. Now we're in this AI revolution. Talk about what that was like and what you've seen over your time as an investor.
Well, when I started in 1983, as you guys referenced, we were the first African-American money management company and mutual fund company in the country's history. And I have to say I was inspired here in Chicago because we had these legendary giants that were so active. They were on top of their game at that time. John Johnson had built Ebony and Jet Magazine, just this extraordinary leader. I was fortunate I'd gone to high school with his daughter and grade school with his son. And, he was someone who was always kind about giving me advice and counsel, his concerns about being an entrepreneur. But he was, again, a role model, someone who was very, very helpful. The other giant at the time was George Johnson, no relationship to John, but George Johnson created, Afro Sheen and Ultra Sheen hair care products. He also started Independence Bank, the largest black bank in the country. He helped start Soul Train with Don Cornelius. He was an amazing entrepreneur, and he was also someone that I had gotten to know a little bit growing up, and that was where I was very lucky, to be able to have those kind of introductions and be so inspired by these gentlemen who not only had built great businesses and employed lots of people, but were very engaged in the community. George Johnson always made a home for Reverend Jackson when he moved here to Chicago to start Operation Push. He was, responsible for 60 tables every year at the Urban League dinner. I could go on and on. He was just something that was truly, really remarkably special as an entrepreneur. So that was something that was really lucky for me to see that, and to see that you could start a Black-owned company at an early age and still be successful. And so that was it. I got a friend from high school to start the company with me. I went to all the friends and family and raised about $200,000 to start Ariel. First client was Howard University. They gave us $100,000 out of their endowment to manage. And we slowly built the firm from there. We manage about $15 billion now. So we've come a long way from those early days of that first $100,000 client. But again, the friends and family that were just so kind to me to give me an opportunity and believe in us at that early age made all the difference. And you can't thank them enough.